Think of the stock market as a crazy person named Mr. Market. Every day, he'll come to you and offer you a price to buy or sell shares of companies. On some days, he gets drunk and thinks the future will be awesome. And he offers companies worth $100 per share at very high prices, like $150 per share. On most days, when he's not drunk, he acts normally and offers you reasonable prices, like around $100 per share. But on some other days, he becomes incredibly depressed and sees a very dark future. As a result, he offers companies worth $100 per share to you at $50 per share.
Dad, what are stocks?
They are pieces of paper that allow you to own parts of a company. You can buy and sell them in the stock market. If the company grows, then your stock will become more valuable over time. But if the company does a worse job over time, then your stock will be worth less in the future. If the company does such a poor job that closes down, then your stock will be worth nothing.
Dad, I don't really understand, but it sounds interesting. Can you explain a little bit more?
Sure. There are a few different ways to make a living. You can earn money actively by working at a job and getting paid for the hours you put in. That's the way most people do it.
Like you have to go to work every day?
Exactly. Or you can start a business or invest in a business. And as the business grows, you can earn money for yourself. Imagine you have started a business. Let's call it Warren's Enterprise. Every morning, you buy a packet of 5 gum for $1. You then go to school and sell each gum to your friends for a quarter. Let's say you're such a great salesman, or your friends love gum so much, you're able to sell all 5 pieces all the time. How much money do you make each day?
So a quarter times 5 is $1.25. I bought the packet for $1, so I make 25 cents?
Exactly. So every week, you're making 25 cents Monday through Friday. That means you earn $1.25 each week, right?
Right.
One day, you talk to your friend Elliot about your business. Elliot says, "Warren, that sounds like a great business. I would like to be a part of it. Can I buy a part of your business?" You think about it, and it seems like a win-win situation. Selling part of the business to Elliot means you'll have more money, which allows you to buy more gum. This means you'll be able to make more than $1.25 per week. For Elliot, buying part of Warren's Enterprise means he'll be able to share part of the profits as your business expands.
Yeah, I like the idea.
So now the two of you are faced with the question, how much is Warren's Enterprise worth?
Yeah, how do we determine that?
Well, if you make $1.25 per week, how much does Warren's Enterprise make in a year?
There are 52 weeks in a year, so in a year I will make $1.25 times 52. Let me get my calculator. $1.25 times 52. 65.
Right. In your case, you need to subtract holidays and the weeks in which schools are closed. Plus, there will be days when you can't sell all 5 pieces of gum. But for simplicity's sake, let's say your business makes $50 per year. In the stock market, people generally calculate how much a company is worth based on how much the company can earn per year. When times are good, meaning people have jobs and money to spend, and banks are willing to lend, people are willing to pay more for businesses. When times are bad, meaning people have less money and are afraid they may lose their jobs, they pay less. There's something called the PE ratio, or price to earning ratio. This is simply the price the company is selling for divided by how much the company earns per year. This tells you, assuming things stay the same they are, how many years it will take to make back your investment. In good times, the PE ratio can get very high, like 40 or 50. In crazy times, people can pay PEs above 100. On the other hand, in bad times, the PE ratio can be low, like 5 to 10. So there's a big variation in how much a company or its stock can sell for, depending on the mood of the market.
I see.
Even within a short period of time, how much people think a company is worth can change a lot. We can look at how much the stock market thinks the company is worth within a 1-year time frame, and you'll see what I mean. What are some big companies you know?
Disney? I love Disney movies, and we have been to Disneyland too.
So Disney's value went as low as $196 billion and as high as $368 billion within the last year. That's a big difference. It's true that COVID has affected many of Disney's operations, but a company as solid as Disney doesn't lose almost half of its value within a year, right? After COVID, things will most likely go back to normal.
Yeah. How about Apple? I use my iPad every day. And you use your phone.
Apple is another good example. Within the last year, its value fluctuated between 1.4 trillion and 2.4 trillion. There is a $1 trillion difference in how much people think the company is worth. You can look at all the large, stable, profitable companies. Without exception, their prices vary widely within the same year. If your search expands to 2 years, that variation will be even wider.
Wow, why?
We'll get to that. First, let's go back to Warren's enterprise. In your case, the cash flow from Warren's enterprise is very steady. So the evaluation of your business is relatively straightforward. Let's take a midpoint number and use a PE ratio of 20. Then Warren's enterprise would be worth $50 times 20, which is $1,000.
What? Warren's enterprise is worth that much?
Seems quite high, doesn't it? The companies that are listed on the stock exchange are usually large companies with a proven record of earnings and stable management. Right now, the average PE ratio of S&P 500 companies, which are 500 of the largest companies listed on the United States stock exchanges, is 45, meaning people are paying 45 times the company's yearly earnings. So if we put a valuation of Warren's enterprise based on that, it'd be worth $2,250.
Wow, that's a lot of money for my little gum business.
It is. The current PE ratios for many of the companies on the S&P 500 are very high if you use history as a guide. Now, for Warren's enterprise, there are many things that can go wrong and decrease its earnings as well, right? Can you think of some examples?
Like if I stop selling gum or my friends decide not to buy gum anymore?
Exactly. Other things can happen, like your school saying gum selling is no longer allowed, or your parents stopping you from doing it. Also, other kids at your school may see how much money Warren's enterprise is making and decide to sell gum as well. Their competition, meaning other kids trying to sell the same thing as you, will naturally make your business less profitable. This is because now, to attract people to buy gum from you, you need to lower your price. If not, some of your customers will buy from other kids. In a capitalistic market, which is what our market is, there is fierce competition in business. Good businesses attract competition, which makes it harder to make money for everyone. As a result, you'll see companies go out of business all the time. Looking at all the ways Warren's enterprise may decline over time, I agree with you. $2,250 or even $1,000 is a very high price tag for your gum business.
If I closed my business down, then the business would be worth $0, right?
Right. On a positive note, good things can happen to your business as well. Since demand seems high for your gum, you decide to buy 2 packets of gum every day and sell those. Then earnings from your business will double. This means instead of $50, you can earn $100 per year now. And if there's still more demand, you can buy 3 packets and so forth.
I see, but we still don't know which way the business will go, right?
Exactly. This makes determining how much a company is worth challenging. The future is hard to predict. You will see all kinds of experts offering different opinions on the same companies. In Warren's enterprise, you have one product, and we are assuming constant price. In real life, most companies have many products, ever-changing prices, and ever-changing market conditions. In your case, you may decide to split Warren's enterprise into 2 equal shares, keeping 1 share for yourself and selling 1 share to Elliott. In the case of large publicly listed companies, they divide the company into millions or even billions of shares. Each time you buy or sell a stock, you're literally buying one very small part of the company. In the case of Apple, there are roughly 16 billion shares out there, so you can buy each share for about $130 in the stock market today.
Thanks, Dad. Now I understand what stocks are.
You're welcome, Warren. I'm glad you're asking these type of questions. Schools usually don't teach you these things. When you're buying stocks, one important concept to always keep in mind is a margin of safety.
What is that?
Let's say we calculate a company to be worth around $100 per share. When the price is at $130, do you want to buy it?
No, because it's too expensive.
Right. Think of the stock market as a crazy person named Mr. Market. Every day, he'll come to you and offer you a price to buy or sell shares of companies. On some days, he gets drunk and thinks the future will be awesome. And he offers companies worth $100 per share at very high prices, like $150 per share. On most days, when he's not drunk, he acts normally and offers you reasonable prices, like around $100 per share. But on some other days, he becomes incredibly depressed and sees a very dark future. As a result, he offers companies worth $100 per share to you at $50 per share.
Wow.
The best investors in the world are the ones who buy $100 shares at $50 when Mr. Market is depressed. A margin of safety means you try to buy a company you think is worth $100 at $50. That way, if you're right, you'll make money, as Mr. Market eventually gets the price right, and as the company continues to grow. But if you're wrong, you don't end up losing too much money.
Dad, how do we know if Mr. Market will eventually get things right and figure out the company is worth $100?
Good question, Warren. This has been studied by some really smart people. And we know for sure that while over the short term, Mr. Market acts like a wild, emotional guy, he always gets it right in the long term. If you wait 2, 3, or maybe 5 years, he eventually figures out how much a company is truly worth. Getting back to Warren's enterprise, if you offer half of the business to Elliott at half of $2,200, which is $1,100, would it be a good idea for Elliott to buy it?
No, because it's expensive and there's no margin of safety.
Exactly. But let's say you offer half of the business to Elliott at $150. Do you think Elliott should take it?
If I make $50 a year, Elliott will take $25 a year. That means he can make his $150 in 6 years. That's much better.
Right. How about if you offer half of the business to Elliott at $25?
Oh, then he should definitely take it because he will be able to make back his investment in just 1 year. And we can expand our business and maybe he will even make it back in less than a year.
Exactly, Warren. Investing is about having the diligence and discipline to look for and wait for that type of deal. For you, selling half of the business to Elliot at a lower price may make sense as well, because he may be able to help you build and expand the business. With the two of you together, maybe you can sell 3 packets of gum each day. Okay, that's it for today. There's a lot more to be learned. We can talk about it next time if you're interested. There are things like durable competitive advantage, return on invested capital, price to free cash flow, debt to equity ratio, and many others. Today, we talked about how to price a company or its stocks, but what makes a good company? What allows some companies to continually do better than its competitors? Is it better to buy a good company at a fair price or buy a fair company at a good price? If you save up your pocket money, we can start analyzing companies and when we should be buying from Mr. Market. Over time, you'll see your investment compound and grow.
Yay! That sounds like fun, Dad. I will save up my money now. Here's my joke of the day. What did the sink say to the potty? I'll give you some time to think about it. 3, 2, 1. You look flushed. Thank you for watching. Please remember to click the like and subscribe buttons below. You can turn on the notification bell if you wish to be notified when our next video comes out. Thanks!